Welcome to Invest. We talk about investing, finance, and professional development. As the record time of 9:40 a.m. on Eastern Time on the 15th day of 2023. Hope you guys have a great week so far and also happy weekend. Ethereum closed $1,535, up about or down about 1% so far. Respect to overall crypto market, so this morning right now is not really doing anything. It's mostly just consolidating at the respective level as we have identified that's 1550. But you could see that clearly we are $15 below it. And also we've been quite extended for how long now? Ever since, if you really look at the takeoff, ever since we formed that golden cross on the 3rd, we've been taking off for the last 12 days so far, right? Just over, a little bit less than 2 weeks in on escalating on all fronts due to, positive job numbers. That's one of the first propellant. And then subsequently, just news that have been, not the most active or the most seismic in terms of driving psychology so far onto, leaping up to the level that we at right now. And on a technical front, we can understand that based on our regurgitating technical analysis so far has been, we know that we've been very extended. So dollar cost averaging at these levels, right? Unless you're thinking like really long term, like decades out from now, I believe, and this is something we all kind of collectively believe, right? Based on the comments I've been reading, is that a lower level will be coming, and I think a more opportune time and also in a risk management perspective will be coming shortly as we approach closer and closer to the 31st and the 1st of the FOMC meeting, depicting on how we're doing with the economy so far. Are we going to go with 50 basis point? Are we going to go with something else higher or lower? What's the direction from here? We have heard from JP Morgan and also with respect to other banks talk about the price target, talking about their outlook of the economy, and seems like across the spectrum, it's been a little bit mixed signal, but definitely leaning more towards the negative side of the spectrum, expecting that recession is happening in 2023. But I think we know we've been in it for a while, so it's not like we are in this for a new it's not like we're in the beginning of it. We've been in it for a while. It's just that now it's like, are we getting worse in this recessionary environment? Like to further down into just straight up Armageddon depression, if you may, right? Let's take a look at the technical, not technical, the news front. It seems like the main news today is depicted by the U.S. Congress. Janet Yellen has notified, and Janet Yellen, in case you guys don't know, she is the Treasury Secretary, has notified that to Congress that U.S. will reach its statutory debt limits next Thursday. Next Thursday, huh? So next Thursday is technically the 19th, right? And this is updated as of Friday. So yes, we are talking about this coming Thursday, and asked the House Speaker Kevin McCarthy to either suspend or increase the debt limit so we don't blow up our bank account, basically. And Yellen has wrote to the U.S. Treasury Department that a certain extraordinary measures to prevent the U.S. Basically Federal Reserve from defaulting on its obligation. Basically, U.S. has been in debt up to its eyeballs, and now seemingly the debt providers are chasing after us, and we might be going default. So that's another just another synonym for, or euphemism for, going bankrupt, if you may, on its obligation. And she told McCarthy that it's unlikely that the cash and extraordinary measure will be exhausted until early June. I don't know what that really means. Extraordinary measure. Like, are we gonna be basically raising the rates even higher to get more of interest rates? Are we gonna increase tax rates? Basically another way to like milk more money from us so we could pay for the lack thereof in terms of cash flow to pay the debts down. And if we fail to meet the obligation, it will cause irreparable harm to the U.S. economy, the livelihoods of all Americans, global financial stability. It is true because what we have to do if we were to fail the obligation, we'll kind of have to do some sort of refinance structure. If it doesn't work, we might have to go into solvency, like go to bankruptcy court basically, but in the most political and the grandest scale. And also at the same time, what will really eventually happen is depreciate our power, depreciates the currency value of US dollars. And what that means is that everything will become just more expensive. Everything will become more difficult for just circulations of money. And that will just have a seismic effect on hindering us. So that doesn't seem like a positive signal at all. It seems like everybody, I think it seems like Janet Yellen is basically calling, everybody, with a deer in the headlight. Everybody in Congress are butt ass naked right now, if that makes any sense in an analogy perspective. And we are in a big crunched moment. So yeah, hopefully that makes sense. I'm not trying to be too negative, but that's really what is happening at the moment. So with that being said, this might translate into some volatility coming as another macro black swan catalyst that we're expecting. So with respect to the mitigations that we're seeing right now, it might have some effect on the equity market, definitely, because when cash becomes more expensive due to its lack of value, you still have to pay the same level, right? With higher tax rates potentially happening, with the highest interest rate, that just means that we have to work with higher expenditure while at the same time being squeezed really hard at the bottom. So it's not the best, right? We're getting squeezed on top, with respect to a top line revenue, also getting squeezed at the bottom at the earning level. So seems pretty rough across the spectrum, just optically speaking. And also with respect to the technical, just on Ethereum specifically, you could see that we've been extended for quite some time. We are at 82. We were at 85. It seems like the apex is already formed on a daily. On the weekly, you could see that we are also forming some resistance. So coming back down from 15,500, not 15,500, 15,050, 1550. Sorry, we might even say, I'm like losing my mind right now. 1550 would be very logical, and I think we are coming down to the next level of support, ideally firstly at the 1450, but all the way down to ideally back to 1250 again. On the Bitcoin side of the equation, you could see that this looks like a rocket ship. This doesn't look healthy to us. You could see that with respect to the ball in the baseball field, it has already reached the apex in the sky, and now it's coming back down, and we are at 86 out of 70. So remember how extended we are. And then on the weekly, you could see that we are also getting blockade on top. Doesn't look good to us, right? So definitely do not advise DCA at the moment, in just like for risk management sake, right? But eventually we should ideally see some rebound much later, basically maybe half a year out from now, as we get more clarity from the Feds. On the index front, you can see that SPY is up and away on a daily. You could see that with respect to the resistance level, we are getting closer and closer to it, and the next level of resistance is going to be somewhere around 65. On a weekly, you could see that we have been cross up and then cross down. So we are at the cross up right now, so we need to cross down. We are at the resistance level right now, so what we need to do is kind of come back down a little bit. But it seems like we are slowly fusing into a reverse head and shoulder, right? 346 would be the head, shoulder number 1, 362, shoulder number 2, 364, somewhere around there. But I think in the immediate term, I think we need to kind of cross down before we cross up, similar to what we did here, but on the secondary shoulder perspective. So what that means is that seeing downsell pressure will be very logical. from here, and this is applicable across the entire market. So sell down in the next couple of months would not be a surprise, and then reverse as we get closer and closer. And you could see that with respect to the monthly resistance, we have been rejecting quite nicely. So that means a rebound should be in sight. But, it's not going to be anytime soon. It's going to be months away from now. Okay? Quarters away from now, too, actually. So I appreciate you. I'm going to head off to the gym now. And also going to be out catching up with a friend who's in town. I'm getting Russ and Daughters bagels, and if you're in New York, it's like one of those famous delicacy that they're famous for, the salmon lox bagel, the fish, and I'm very excited for it because it's one of my favorite food spot, and I've not been there for a long time since the COVID. So I am excited for it. So I'm doing like a fasted workout, so I really look forward to it when I eat later today. So I appreciate you. Have a good day, and I'll check you on the next one. Take care. Bye.